Hey, it's Eric with the Future Mill. Let's talk about taxes. Everybody's favorite thing is taxes, right? Yeah, mine neither. It's okay though. What I want to talk about is a simple way that decreases your taxes, and this is what billionaires are doing, and it's the reason that billionaires are paying less tax today than most average working Americans. Let's do this. Billionaire Bill Gates wrote a blog post talking about how a lot of Americans are paying a significant portion of their income to taxes. That's because the IRS top tax bracket is 37%. What he also talked about was a lot of wealthy people don't make the regular income that other people make. Now, that doesn't make sense, does it? You would think that wealthy people do make an income. Well, they make their income, but it's from a different stream of investments, and it's not actually a salary that they're getting paid. So when they're getting their income, it's not going into the standard tax brackets that the IRS puts in place. Instead, it's something called capital gains. Capital gains is where you are taking a profit from either a real estate property or an investment that you made. So think of it like this. You bought a stock for $100 and it goes up $75. Well, your cost basis, the $100 is what you actually paid for the stock, but the $75 is the profit. That's the capital gains on the investment. Well, you have short-term capital gains and you have long-term capital gains. Short-term capital gains are classified as anything that's held less than 1 year. So if you had that $75 in profit and you sold the stock without holding it for a full year, you would pay $75 of ordinary income tax. So if your tax bracket was 37%, you would pay 37% on the $75 profit. Now the trick is to hold this long term. It's long-term capital gains. Long-term capital gains are taxed anywhere between 0% and 20%. The max you're going to pay in long-term capital gains generally, per the IRS, is 20%. Wouldn't you want to pay 17% less, or maybe even less than that in taxes? That's what this is all about. It's easy to do, and this is what the billionaires are doing. They're opening up what's called an individual taxable account. This is where you're going to make money, you're going to pay the taxes on the money, but then you're going to invest that money in the individual taxable account, and the only thing that you're going to pay on there is the capital gains. It's kind of like a Roth IRA. If you were to pay taxes on the Roth IRA though, the gains are actually tax-free. Though with this, the way it works is you're going to pay the taxes on the earned income, just as you would with the Roth IRA, but the actual gains you'll have to pay on. I'm not telling you this is a direct recommendation of something to do. Oftentimes, billionaires are maxing out all of their other alternatives before they go to the individual taxable account. But it is a great way to have liquid money and to capture the capital gains instead of paying ordinary income tax on your long-term investments. If you want to set this up or want a professional to manage your money for you, go to thefuturemill.com, click Get Started, and book a call. We'll be happy to set this up for you. As always, thank you so much for watching, and please be sure to like and subscribe.